In this video, we're going to go over 7 of the best companies to take a look at this week. All of these companies have some news coming out over the next trading week, which may lead to some volatility in the share price. Any dips are a great buying opportunity, and any short-term capital gains are always nice for our portfolio as well. So for each of these companies, we're going to take a look at their current financial position, the future growth expectations, and why they're included in this week's video, and what news release is coming out. We have a combination of earnings reports, investor day presentations, and new product launches from each of these companies over the next few days. And for all of the companies in this list, they're diversified across various sectors of the market, and we have a combination of both growth stocks and dividend payers in this week's video. So if you're new to the channel, everyone, I am the Gen Z Investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell. We talk about any stock market major news and headlines. So please hit the like button, subscribe to the channel for daily videos about the market, and we're going to jump right into the first stock in today's list, which is Adobe. This is one of the largest software companies in the world that has very high future growth expectations over the next 5 years. The company has a current market cap at $233 billion, currently trading up 66 on the 1-year chart, but shares are actually down close to 9% from the most recent high back in the month of September. So they haven't been posting new 52-week highs over the past few weeks like a lot of other tech stocks have. So this is an interesting week for Adobe. So they released their latest earnings on December 10th. We're estimating earnings per share of $2.66 on revenue of $3.36 billion. And this is interesting because even if they crush these analyst expectations, we may still see a dip in share price. Some of the largest tech companies in the world who all beat analyst expectations for both revenue and earnings per share saw a decline of over 5 to 6% the day the earnings report came out. So that's why I think Adobe should be on your watch list this week, because this is a very strong company. They have a nice subscription-based revenue model. With the new remote work, their subscriptions have gone up because people are using it from various places and are subscribing to more accounts. And plus, with this new transition to a more digitalized society, Adobe's products are only going to grow in demand as more traditional businesses transition to more focus in the online world. So Adobe has high expectations for their earnings this week. They've beaten on the last 4 quarters, and we're expecting over 16% year-over-year growth in earnings per share, followed by double-digit year-over-year growth over the next 4 quarters into the future. And Adobe's got some beautiful financials as well. They have 31% profit margins, 35% return on equity, and overall the company is expected to grow by more than 17% per year over the next 5 years. And over the short term, the company is ranked as a strong buy, coming in at a 1.9, and the analyst price target over the next 12 months has the share price at $552. Currently sitting at $486, a lot of short-term upside movement is expected in Adobe's share price. So this is the first company to take a look at this week. They report their latest earnings, and even on earnings beat, the market's been extremely volatile. We've seen some of the strongest companies in the world still see a massive pullback even after they announced record-breaking earnings. So Adobe is definitely the first growth stock you're going to want to take a look at this week. Moving on to number 2, we have Walt Disney. Ticker DIS currently sits at around $154 per share and has seen a crazy year in 2020. So of course, during the pandemic in the month of March, their share price got absolutely hammered, dropping all the way down to $85 per share. Because they were forced to shut down their theme parks, they laid off thousands and thousands of employees, and overall there was not a lot of strong future outlook for the business. But since that point, we've seen long-term sustainable growth in share price since that most recent low, and they're currently sitting at a 52-week high. So it's interesting for me to discuss a company at that 52-week high range, but I think there is some potential to see a lot of growth coming from the share price moving forward. They currently have a market cap of $279 billion. And why they're included in this week's video is because they're hosting their 2020 Investor Day presentation on December 10th. And as of late, the company announced a major reorganization to primarily focus on streaming. They have one of the fastest streaming service growth across the world, and their 3 streaming services combined have over 100 million paid subscribers. Disney Plus has seen record-breaking growth as well and is really driving the strong future growth expectations for Disney over the next few years. And before, they were getting a lot of criticism because Disney was not focusing and not really developing new content for the streaming platform, and investors were worried that the quality of the videos in the platform was going to go down if they don't produce new content. But over the past few months, you can see back on October 12th, they announced a new primary focus to actually reorganize the business to prioritize the streaming services. And in this Investor Day, they're going to discuss the company's new focus for direct-to-consumer streaming services, and I think that's going to really bolster up investor confidence. If Disney comes out with a great presentation describing everything they're going to do for the future and their plan to really develop and grow the streaming platforms that they own, I think we may see a strong increase in share price, not only in the short term, but I think it's going to be long-term sustainable because of the high profitability of the streaming platforms. So Disney's a company to take a look at this week. Very strong household brand, and I'm sure once the pandemic is over and it is safe to go back to all their theme parks, those will come back busier than ever, setting record highs in revenue from all those events because people are going to feel cooped up for all these months and years they spent at home, and a Disney vacation may be the thing to help them, relax, have some fun after the pandemic is over. Moving on to stock number 3, we have Costco. So this company is up more than 25% this year and currently has a market cap at $164 billion. This is one of the largest retailers in the nation that has seen tremendous growth because of the pandemic as they sell goods in bulk, which people are loading up on. And with a lot of small businesses being forced to shut down their doors due to the pandemic, Costco is one of the few retailers that's going to remain fully operational to collect those revenues through the holiday season of 2020. And they're included in this week's video because they are sharing their latest earnings results this week as well. So they report December 10th after market close. We have a revenue expectation of over $42 billion, with earnings per share coming in at an expected $2.04 per share. They've seen 11 upward revisions for earnings per share expectations over the past 90 days, with 0 downward revisions over the past 90 days as well. So analysts are bullish on this report and have bolstered up their expectations for Costco. Over the previous 4 quarters, we've seen 4 consecutive EPS beats, and this year we're expecting close to 18% year-over-year growth. Costco is a sustainable, long-term dividend growth company. They only yield 0.75% right now as a starting yield. They only pay out 28% of their earnings as a dividend, so a lot of room to reinvest back into the business and to grow that payment moving forward. And the company's 5-year dividend growth rate average comes in at a massive over 14.5%. But Costco is a very special company. They choose to issue out special dividends every 2 to 3 years for investors. And over their latest report, they announced a $10 per share special dividend. And if we take a look at their longer-term dividend history, over the past decade, you can see these small little bars are their quarterly dividend payments that have been growing each and every year. But the 4 major spikes in the quarterly dividend payment were all special dividends they paid out to investors over the past 10 years. And you can see 4 very large special dividends over the past 10 years, each about 2 to 3 years apart. And this later special dividend is a record high at $10 per share for the Costco shareholders. Pfizer is the 4th company we're going to take a look at this week. So the company trades at just over $40 per share. They are up only 5.7% on the 1-year chart. And of course, we all know Pfizer because they are one of the companies that has developed a vaccine to help solve the pandemic. They are working very hard to getting their vaccine on the market. They have been looking for approval from a lot of different European and of course North American countries. And they're making some big headlines this week because the UK has authorized the vaccine and will start to roll out it to the public this week. So I think that's huge news for Pfizer. This is the first major fully developed country to start trying out their vaccine at scale. And if Pfizer can deliver the vaccine, it can be successful. I think the share price is really going to grow. And I think Pfizer is going to see a lot of upside potential over the next few weeks. I also think once it starts hitting the US and starts getting distributed at scale in the United States, if it is successful, I think the company has a lot of new highs coming very soon. And this is a company that does pay out a beautiful dividend as well. A 3.77% current yield, they only pay out 52% of their earnings, and their 5-year dividend growth rate comes in at over 6.7%. So for a company with some strong potential to grow if their vaccine is successful, that's starting to get released this week, plus a nice 3.7% starting yield that's growing at an average rate of 6.7%, this may be a company you're going to want to take a look at before there is more upside if the vaccine is successful. Number 5 in today's video is Broadcom, ticker AVGO, currently trading at over $411 per share. This company has seen a beautiful upward trend over the past 6 months and is up more than 32% this year. So this company has a market cap at $166 billion, a forward PE at 18.7, and a current yield at 3.16%. So they are making headlines this week because they are sharing their latest earnings report. So they announced after market close on December 10th, we have a revenue expectation of $6.4 billion with an earnings per share number of $6.19. So we've seen 28 upward revisions and only 2 downward revisions for EPS over the past 90 days. So another sign that analysts are bullish on this quarter and think they're going to beat analyst expectations, so they bolstered up their expectations to try to beat in line. If we take a look over the previous 4 quarters, 2 beats, 1 miss, and 1 in line. So kind of a history of mixed results from Broadcom, but over this year's quarter, we're expecting close to 15% year-over-year growth, followed by 4 consecutive quarters of very high year-over-year growth into 2021. So this is a dividend-paying company that yields 3.16%, so a nice average dividend yield. They pay out 59% of their earnings as a dividend, so enough room to continue to grow their dividend moving forward, plus reinvest money back into the business. Plus, they have a 5-year dividend growth rate of 55%, which is absolutely incredible. And if we take a look at their dividend history, 10 years ago, the dividend payment was 8 cents per share per quarter. And over the latest quarter, they're paying out $3.25. So they've gone from 8 cent per share dividend to $3.25 per quarter dividend. And you can see the tremendous exponential growth in that dividend payment year over year, which is absolutely incredible. They've increased their dividend from back in 2017 of $1.02 all the way up to $3.25 in 2020. So incredible dividend growth from Broadcom, and this may be a company you're going to want to take a look at because they do share their latest earnings this week as well. Coming in at number 6, we have Starbucks. They currently trade at around $102 per share, and they are up close to 20% on the 1-year chart. They have a market cap at $120 billion with a current dividend yield at 1.76%. So this company has seen some long-term sustainable growth since the month of March, and you can see consistent growth over the past 6 to 8 months. And why they're included in this video is because they're hosting their Investor Day presentation on December 9th. So with these presentations, they share the future growth expectations, they go over what the company's planning to do to continue to grow the business, and their plans for the future. And if this company, Starbucks, can provide some strong growth expectations, not only in financial figures, but with overall trends and overall society movements moving forward, and they can be a leader in the industry down the road, this company is expected to continue to grow. And if you live in any major city, there are Starbucks on over every corner. No matter where you go, you are going to find Starbucks nowadays, and this company continues to grow their brand dominance, especially through the holiday season when they are known for some very strong holiday drinks that provide a nice boost to their top line. So they do pay out a dividend, currently yielding 1.76%. They pay out only 64% of their earnings as a dividend, and they've been growing that payment on average of 22% over the past 5 years, which is very nice to see. The final stock in today's video is Lululemon. Currently trading around $377, up 67% this year. This company has a market cap of around $49 billion, and they do not pay out a dividend. So they've seen some strong growth over the past year, and they've seen some beautiful growth with regard to their revenues over the past 5 years as well. Each and every year, they're topping expectations, and their total revenue line has been trending in the right direction, nice upward trend year over year. And in the past 12 months, when consumer spending has gone drastically down, they've seen only a very slight decrease. So they sell a more premium product. A lot of their goods are expensive, but they've only seen a slight decrease when a lot of other luxury type brands have been absolutely devastated because of the pandemic. And you can see net income numbers continue to grow, nice upward trend in net income year over year. And if we take a look, they report earnings this week on December 10th. We're expecting a revenue estimate of just over $1 billion with EPS of 87 cents. And you can see, different from the other few companies we've already taken a look at, analysts are actually bearish on this quarter. Only 5 upward revisions, but 23 downward revisions over the past 90 days, which just shows that analysts have been reducing their expectations for Lululemon over this past quarter. So over the past 4 historical quarters, we have 3 beats and 1 miss. In this quarter, we're expecting actually a 9% year-over-year decline, followed by some beats over the 4 quarters down the road. But what's interesting is because if you are a believer in Lululemon, if you believe the company is going to weather through this storm and become a long-term growth play, do you think they're going to continue to grow top line and bottom line over the next 5 years down the road? Then this may be an interesting time to buy. Of course, they've seen massive growth this year, But if they have seen this bearish expectation from analysts, and if they miss this EPS number, the shares may go climbing down. As fast as something goes up, it can always go back down, and the share price may see a huge decline, and this may be a nice buying opportunity if you believe in this company and the brand they have over the long term. So those were 7 different companies. They all have a major news event. We saw some Investor Day presentations. We saw the launch of Pfizer's vaccine. And of course, we went over some companies who report their latest earnings this week as well. So thank you for watching. We do this video every single Sunday. So subscribe to the channel for daily videos with the market, and see you in tomorrow's video.